And joining me now from London is Danielle Lacalle, Chief Economist at Tressis. Danielle, it's great to have you on the show today, and some decent gains really across the board, U.S. equities, but international equities as well. What's the driving force here?
I think that the market is finally realizing that this is a negotiation, that the tariff tantrum made no sense, and that there is a great opportunity to buy quality at a reasonable price. The market has seen a level of volatility that was really unjustified by the news that were coming from the geopolitical scene. And I think that what we are going to see in the next weeks is the positives coming from a number of trade deals, as well as tax cuts, as well as economic figures that show that everything is significantly more optimistic. And I think that the earnings season is also helping. The earnings season is much better than what investors were fearing. Both the earnings and the sales surprise are positive.
What do you see as quality in this market?
Oh, I think that there's tremendous opportunities in this market. For example, I think that industrials that have been really hit by the volatility created by the tariff tantrum is one of the sectors that should be looked by investors. Others that I think are worth watching are those companies in the telecom sector, in the telecommunications sector, and everything that has to do with technology that are proving that earnings are actually more resilient than what markets were fearing, and therefore it's an opportunity to buy at a much cheaper valuation. And I would also add the very significant opportunity in defense. The defense sector is likely to see a very strong growth coming from the improvement in defense spending, both from the NATO members and also from other economies.
Interesting. So do you think that the low is behind us, Danielle, that this negotiation is close to coming to a close?
I don't know if the low is behind us. I know that we're very close to a bottom, because what we know right now is that we have taken away all of the negatives that were perceived by many commentators. Many commentators thought that the tariff announcement made by the Trump administration was something that was not going to be negotiated. And what we're seeing is that there is a tremendous push from many sectors and many countries to get to quick trade deals, and trade deals can be achieved very rapidly. So I think that if we are not at the bottom, we're very close to the bottom. And if we look, as we do, on a long-term basis, if you think on a long-term basis, there is definitely an entry point right now that is worth considering.
Interesting. So from a market perspective, this is an entry point that perhaps looks attractive to you, Danielle, as you just explained, but as an economist as well, I mean, has there been damage done to the economy, whether it's via consumer sentiment or even some of the hard data?
There is some damage, of course. There is some damage. Consumer sentiment is low, but it's significantly above the levels at which it was in 2022 and also in September 2023. So I think that if we look at the hard data, and especially inflation, which I think was a big concern for investors, I think that all of those are likely to show that, yes, there has been some damage, but it's not the kind of damage that would justify such a correction as the one that we have seen.
Interesting. Where do we go from here? Do you think that we stay in a range, or is this enough momentum, some of the news developments, since this is a headline-driven market, that we've seen over about the past 48 hours?
It's going to depend on the headlines coming from China. I think that right now, it is pretty much consensus that we will get trade deals from the UK, from Japan, from South Korea, etc. I think it's going to be whether China starts to become more accommodative to the idea of negotiation rather than escalating the trade war. But more or less, I think that we may be range bound throughout the period of the 90-day sort of tariff pause, while we get the news of both the tax cuts, the developments in inflation and in GDP growth, and also in investment.
You're right. We are waiting, of course, for Congress to push through that bill to the president's desk, specifically specifically outlining his agenda that would allow the president to act on that here in the United States. What else is on your radar, Daniel, that our viewers should know about?
I think that we have to pay attention to commodities. I think that commodities have given way to a perception of very strong. Think about this. On the one hand, we have the market concerned about inflation, and on the other hand, we have commodities showing us an enormous level of disinflation. I think those two things need to get closer to a more realistic scenario, which is obviously that commodities are not going to slump to depression levels, and at the same time that inflationary pressures are much more benign than what market participants fear.
Daniel Lacalle, chief economist at Tressis, joining us from London. Daniel, thank you.
Thank you very much.